We got lucky on the single best chart. I made this like a week and a half ago. I said, we got to do this on a Monday for Jeff Saut. Here it is, iron ore over in Shanghai. You say, so what? Well, it's a big what for Asia and frankly for the rest of the world. Shanghai iron ore, there's a number of ways of measuring it. And all I got to tell you is with this fitted moving average, Jeff Saut, that is the ugliest technical chart known to mankind. When are we going to see a catharsis in iron ore or commodities that signals a blowout where you can get some interesting commodities? I haven't seen it yet.
No, I don't think you've seen it. I don't think you've seen it yet either. But I do think you're going to see it between now and year end when tax laws.
Really, that soon?
I think so. Because I think the GDP is going to pick up next year. The world GDP is going to pick up next year. I actually think the U.S. economy is stronger than the surface figures suggest.
Well, that's how we booked you with Ian Shepherdson, because you agree with Mr. Saut, I know, very, very much so. But you know, those commodities mean something for Australia, for China as well. Is that expressed through currency adjustment?
Partly it does, yeah. I mean, there's no way around this. This is a gigantic transfer of resources from producers to consumers. And if you're a producing economy, and especially if you're a non-diversified producing economy, this is horrible. And it's almost certainly going to get worse. And so, you know, we talked about Russia this morning, which is, an oil and gas economy, and really not very much else. And it's very hard to see a good way out for them in the short term. But that story, I'm afraid, applies to a bunch of Asian economies as well.
John, these guys should keep talking. We're going to get to a 38 handle on West Texas Intermediate by the time Saut exits the stage.
By the time the market opens, their optimism will have the Dow through 30,000. My question for both of them would be this. I'm looking at iron ore. I'm looking at the headline this morning. It dropped below $40 a metric ton for the first time since 2009. It's not 2009 because the supply story is so much more dominant. But the question, and to you, Jeff, the question that will be asked this morning is whether there is a demand story there, whether there is a little red flashing light going off in Asia. Is there?
Well, you know, there's a compositional change in the Chinese economy. Yes, they've quit buying iron ore, they've quit buying copper at the margin. But if you look at what iPhone sales are doing in China, they're up 80% year over year. Nike's business in China is up 30% year over year. The importation of higher quality foods is up 26% year over year. So I think the Chinese are changing to internal domestic demand. But I think that commodities tend to track their incremental cost of production, and I think you're pretty close to that. I don't buy that crude oil is $20 a barrel in terms of the cost of production. So I think crude oil is in the process of bottoming here. I think the master limited partnerships in the midstream space are a buy going into year end, and I think that the commodities are in the process of bottoming.
Ian, to that point, to this pivot from the industrialization of China to the service-safe sector economy, they're like two tectonic plates rubbing against each other. Is there an argument that actually there will be an earthquake? They can't make that transition from the old economy to the new engines of growth without an earthquake, without a damaging downturn in growth?
Yeah, I think that's right, but the question is when. I have no confidence that the earthquake happens next year or the year after. I'm pretty confident that if we're looking ahead over the next 10 years, there will be one. It'll probably be quite big. It's very hard to find an emerging economy that's fully emerged without hitting some big bump in the road at some point. But what's the mechanism to make it happen immediately? I don't really see it. As Jeff was talking earlier, we're seeing clear signs of a transition away from production into consumption. That's got a very, very long way to run. I'm sure that it can't be managed perfectly smoothly all the way, but I wouldn't bet against it right now.
Dumb question, Jeff Saut. The MLPs, I just looked at one with a 19% yield. Their high yields, their yields have to adjust at some point, right?
Yeah, I agree with that. More money has been lost reaching for yield than at the point of a gun, according to Raymond DeVoe, a friend of mine. Yeah. And I think a lot of the MLPs, especially the upstream MLPs, which have price sensitivity to crude oil, are absolutely going to cut their dividends. But the midstreams are basically toll takers. They have the pipes and the storage, and the crude oil and the nat gas has to come through those pipes, and they stand there and collect tolls. I mean, Warren Buffett has said that the midstreams and downstreams have hard assets and good cash flows. So I think that, as I said earlier, I think the baby's being thrown out with the bathwater.